gets people a little nervous. So I'm interested to hearing what you have to say when it comes to this whole idea of strategy for senior homeowners.
Sure. In fact, I'm going to touch on something that I think we covered or discussed a little bit about reverse mortgages, several months ago. But this current kind of wild ride we've been seeing in the financial markets reminded me of how important senior homeowners um, should consider a reverse mortgage um, to be a integral part of their financial planning. So often there's still this notion that a reverse mortgage is sort of this loan of last resort, or that it's primarily just for someone who maybe has owned the home for maybe decades. They paid it off, but they're low to moderate income folks and don't have a lot of recurring monthly income once they retire, and so they're a little bit concerned about having enough money to live on. And a lot of times we end up with a reverse mortgage customer where they're in that position and they've kind of used up most of their liquid assets, and they're kind of using this reverse mortgage as a last resort. So that's certainly a key part of a reverse mortgage target audience. But there's this whole other type of senior homeowner who may be much better off financially, may own a home that's, again, free and clear or very nearly so, but they've got a lot of money invested, and both in retirement, maybe non-retirement accounts, and fully invested in the markets. And what we see is in those cases, they may have some retirement income recurring, whether it's Social Security, or you don't see pensions too much anymore, um, but they may be, and because of that, they may be using their, at this point, very extensive financial assets, and maybe setting up withdrawals on those assets in part to live on. And we particularly see that when for homeowners like are aged in the 70 to 80 range. For example, at 70, you've got the RMD, required minimum distribution, that kicks in for your IRA accounts. Well, a lot of times that involves not just taking the required minimum, but setting up a recurring monthly to live on. So if for a homeowner like that, in this kind of environment, it underscores why a reverse mortgage can help preserve that portfolio of liquid assets. Because here's the problem. Let's say you got, $2 million in an IRA account, and you're drawing, $6,000 a month from it. Well, the problem with that, and that may work well for maybe a long period of time, but when you have a type of correction that we've seen this last couple of weeks or week, what happens is that that portfolio is starting to draw down because of the market decline, while you're still pulling money out of it, which accelerates the decline. And that can really set you back to where even when it recovers, if you're still drawing that money every month, you're going to accelerate the period of time before that money runs out.